Hi, hello, namaste, good evening to all of you. I hope you're doing good. Is my audio clear to you? Is my video clear to you? Can you quickly respond in chat box? Yes. Welcome to day 4 of FM MCQ live. We are half done with capital structure topic. We're supposed to complete that topic and then move on to working capital management. Am I correct? Yeah, perfect. Yes. So without wasting much of time, did we complete 10 MCQs yesterday? Can you please confirm? Capital structure, I think 10 MCQs in the last session. Am I correct? Can we start with question number 11? Let me know in the chat box. We are supposed to start from 11. Yes. So all those who started from today, all these multiple choice questions that I'm discussing, I'm using PPT, PowerPoint presentation. On the last day, that is tomorrow, once we complete all MCQ discussions, all of this will be made as a PDF file and that will be shared with all of you. Okay, so do not worry when you're attending this session today and tomorrow. Focus on understanding the question, participate in the discussion, reply in the chat box, learn things. Don't worry about question and the answer. Everything will be shared with you tomorrow once the FM MCQ series is done. All right. Yes. Let's begin. Capital structure question number 11. The rate of tax affects the cost of debt. If the rate of tax is high, the cost of debt decreases. Who can answer this in the chat box? The rate of tax is high. What does it mean? Instead of 30%, imagine 40%. Then the cost of debt, KD, will that decrease or will that increase? So is this statement true or false? If you're not able to understand the sentence, put some numbers. Assume 10% tax rate. So it will be 10 into 1 minus T, 1 minus T, and they're saying T, the tax rate is going to increase. Suppose if it is 10 into 1 minus 0.3, it is 7%. If it becomes 10 into 1 minus 0.4, it becomes 60.6, correct? 60%. That means the correct answer is A. If the tax rate increases, cost of debt decreases. I quickly repeat those who missed the explanation. When the tax rate is 30%, it will be 10 into 1 minus 0.3, 70%. Correct? When tax rate is 40%, 10 into 1 minus 0.4, that becomes 10 into 0.6, which is 60%. That means 6%. I'm sorry, 6%. So cost of debt from 7% came down to 6%. That means it is true. When tax rate goes up, KD comes down because you save more. Understand that way. You save more taxes. Yeah. All right. Question 12. Dash refers to the risk of inability to discharge operating cost. Go slow. The word used is operating cost. That means they're talking about day-to-day expenses. If you're not able to take care of your day-to-day expenses, that means this is your business risk. This is business risk. Question 12, option A is the correct answer. What if this question is like this? Dash refers to the risk of inability to discharge bank loan commitments. What if you are not able to repay debentures, bonds? Then it's a financial risk. Correct? When it is about day-to-day operating expenses, they are talking about business risk. Yeah, good. Question 13. The cost of issuing debt capital is less than share capital. Always true. Debt is cheaper. Debt will help you save taxes. The investor who is a debenture holder or a bond holder, because he is taking less level of risk, his expectation of return will also be low. If his expectation of return is low, it becomes cheap to the company. The company who is issuing bond, who is issuing debenture, will be getting the money at lower cost because debenture holder is expecting less rate of return. Yeah. Question number 14. Dash refers to the risk of inability to pay fixed financial payment as promised by the company. I think I covered this just 2 minutes back. This is purely financial risk. You are not able to pay. You are not able to pay debenture interest, bond interest, loan EMIs on time. Then that risk is called as what? Financial risk. This is below EBIT. Yeah. Right. Question number 50. Funds are raised by issuing equity shares, then the number of company shareholders will increase and it directly affects the control of existing shareholders. Read the sentence properly. If funds raised by issuing equity shares, then the number of company shareholders will increase. Correct? When you bring in new shareholders, number of equity shareholders will increase, and when that happens, it will affect the control of the existing shareholders. Answer is 100% true. Answer is 100% true. Correct? And we have discussed this in regular classes also. When you bring money through issue of equity share, it is never a preferred option. It is never a preferred option to the existing shareholder because their control will come down, their ownership will get diluted, their EPS earnings will come down. Correct? Therefore, the answer is A, true. Next, question number 16. Capital structure is also influenced by government regulations. True. How is government regulation going to impact the capital structure? Imagine tax rates are high, then definitely your cost of debt will get impacted, and if cost of debt gets impacted, then your overall capital structure decision will change. Or think in one more direction. What if government makes a change in income tax law saying if you pay interest on debt, that interest cannot be debited to P&L? Then there will be no saving at all. There will be no saving at all. Correct? No tax saving. And if there is no tax saving, the biggest advantage of debt is gone. As of now, the biggest advantage of debt is I pay 10 rupee, I save 30% of 10 rupee. Imagine that is taken out. Imagine that is taken out. I pay 10 rupee, full 10 is my cost. Full 10 is my cost. There is no saving at all. Then companies may not prefer too much of debt. Correct? One big benefit of debt is gone if you take out the tax. Therefore, if government makes some changes in the rules and regulations of Income Tax Act, Companies Act, that will impact your capital structure decision. Yeah, guys, it's not just about correct answer or wrong answer. It's a kind of quick theory revision also that we are doing when we discuss these kind of MCQs. Therefore, I'm not just focusing on the answer. You need to get a quick brush up of all the concepts as well. All right, question number 17. When the company is said to have high degree of operating leverage, if it has high amount of fixed cost and low amount of variable cost? Answer is true. Your operating leverage is high. Your operating leverage is high when you have high level of fixed cost and low level of variable cost. Forget the variable cost portion. Even if that is not there, the moment you see fixed cost being high, then understand degree of operating leverage is high. As simple as that. Yeah. Question number 18. Percentage change in EBIT by percentage change in sale is represented by DOL, operating leverage. Sir, these are all concepts from risk and leverage. Why are we discussing this in cost of capital topic? Please understand, when you sit for revision, I've said this in the regular batch also, I'm repeating once again. Risk and leverage, cost of capital, capital structure, dividend decision are in a way connected. In a way connected. You can still say risk and leverage is slightly independent, but cost of capital, capital structure, dividend decision, you have to study all of that together. Yeah. So in a way, these things are connected. And one day before, when you are revising, doesn't matter whether it is connected or not, we have to cover full syllabus, yes or no. And many cases in the past, they have combined questions from two different topics, risk and leverage and cost of capital. Dividend decision is clubbed with cost of capital. A lot of times They have done this. Yeah. Chalo. Question 19. From the following operating data, calculate degree of operating leverage for a company. Sales given, fixed cost given, variable cost is 50%. Yeah. Variable cost is 50% of sales. Just a second. Yeah. Can you work out and send the answer to me? Question is find out degree of operating leverage, DOL. To do DOL for a single year, or single period data, what is the formula? Contribution by EBIT. So to get contribution, 25 lakh sales, 50% of that is variable cost. So 12.5 lakh, that to be divided by EBIT, 12.5 lakh divided by, I think you get 5 lakh. So I think it is 2.5. I did it without calci. With calci, you can't go wrong now. Is it 2.5, everybody? Yes. Good. All right. Question number, those are still doing. Question 19, correct answer is 2.5. Option B. Yep. Yes, sir. Let's move on. Question number 20. Statement 1, 2, and 3. And they want you to identify which is true, which is not. Operating leverage helps to identify the impact of EBIT due to fixed cost. Impact on EBIT due to fixed costs. Sir, statement 1 is correct. Next. Operating leverage measures relationship between sales and EBIT. Correct. Both statement 1 and 2 are correct. Next. Statement 3. Operating leverage describes the overall position of fixed financial cost. Sir, this is wrong. This is wrong because operating leverage has no connection to financial cost. Financial cost is all about financial leverage, DFL, below EBIT. So, sir, statement 1 and 2 is correct, but third one is false or incorrect. I think option D. I should go ahead with option D. Everyone, this is wrong here. Option D is the correct answer. This option D is correct answer. Yeah. Let's move on. Question 21. Yes, I want you to solve this. XYZ Limited has 60,000 rupee of 60% annual interest bonds outstanding, 1,500 shares of preference paying an annual dividend of 5 rupee, 4,000 shares of common stock, that means equity. Common stock is equity. If the tax rate is 30%, compute earning per share at EBIT of 24,600. Yeah. Guys, some students are asking doubt about question 20. I will discuss it once again after 21. Okay. Let's do 21. I'll go back to 20. Some students are asking doubt about question 20. Yes, yes, I will discuss. Yeah, please do 21 now. Question is to find out EPS and you have EBIT with you. So start from EBIT 24,600. From that you should first minus interest. For interest they have given 60,000 into 16%. You get EBT. From that you have to minus tax. Tax rate is given 30%. And that will give you EAT. From that you have to minus preference dividend. Then you will get EAT, ESH, earning available to equity shareholders. Correct? That you should divide by number of equity shares. I can see a lot of students are saying option C, 0.75 as their final answer. I am waiting. Can others confirm? Can others confirm? Yes, good. Looks like everyone got the answer 21C. Yeah, right. There was some confusion with question 2020. So I'm just going to previous slide. Oh yeah, sorry. In question 20, guys, it says statement 3 is false and rest are true. Yeah. So there is no difference actually between B/D. D also says the same thing, correct? Statement 1 and 2 true and 3 is false. Yeah. B also, D also. I think this is a typing error. Yes. Both are correct answers. All good? Yes. Can I please continue? Can I please continue? 21. 21 is C. Those who had confusion with 20, I hope it is clear now. Yeah. Yes, sir. 21, I think everybody gave the answer 0.75. There is no confusion in that. Right, sir. Question 22. Yes. A detailed question. I want you to solve this. Following data is given under case 1 and case 2 and financial plan A and B. Installed capacity 5000 units. Actual production and sales is only 80%. That means for calculation purpose, don't take sales based on 5000. It is 5000 into 80%. You are actually producing only 4000 units. Selling price given, variable cost given, fixed cost in case 1, case 2, and financial plan A and B, debt given, equity given. What is the EBIT? Go very slow. Under plan B, case 1. I will wait and I want you to try. Everybody should try this. It will take time. I will wait, not a problem. Who can answer? Medha is saying option B, 60,000. Who else got the same answer? Siri, 22, option B. Raju, good. 22B. Guys, question is only up to EBIT. Don't do from top to bottom. Don't work out up to EIT, EPS. They have not asked you all that. Question is just EBIT. Plan B, case 1. Yeah. Now I can see many of them got the answer. Okay, those who are finding it difficult to get, look, sales will be 4000 units into 40 rupee. Variable cost 4000 into 20 rupee. Contribution will be the difference between those two. Or you can go faster. 40 minus 20 contribution per unit into 4000, that is total contribution, minus fixed cost. Which fixed cost to take? They said plan B, case 1, and case 1 fixed cost is 20,000. So from contribution you have to take out this number 20,000. Correct? You get EBIT. That's it. Sir, debt and equity data is given. That's not necessary. You know when will that become necessary? If they ask EBT or EAT, then you have to worry about whether we are in plan A or plan B. Should I take 20% on 20,000 or 20% on 10,000? That will be relevant if question is about earning before tax, question is about earning after tax, question is about EPS. Are you understanding? Yes, sir. So B is the final answer. Let's move on. Question 23. Now, I think the data is same, but question is only how much is the contribution? Sir, this is very simple. Only contribution. For contribution, tell me, should I worry about plan A, plan B, case 1, case 2? Question is simply contribution. Sir, that means I should do number of units into contribution per unit. Correct? That's all. What am I supposed to do? 5000 into 80%, 4000 units. That into 40 minus 20, 20 rupee. Simple it is, 80,000 rupee. Yeah, I hope everybody is getting this. Yeah, some students are not happy with this question. Why? Sir, this question is all below our standards, sir. What is this? What is this? Some students don't like these kind of questions. They say not up to our standard. Yeah, I know. Question 24. Answer this now. Yes, 23C is correct. 24. If EBIT EPS indifference point is 2,25,000, it means dash. It means dash. Who can answer? EBIT EPS indifference point. Indifference point means what, sir? Option A, EPS will be 2,25,000. No, 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 that's wrong. At EBT of 2,25,000, EPS will be 0. At EBT of 2,25,000, EPS will be same. What should be the correct answer? First of all, understand they are talking about indifference point. Indifference point. Indifference point is not about EPS being something, EPS is 0, EPS is negative. Understand indifference point. Between two options, my EPS should be same. And in option C, you have at 2,25,000 EBT or EBIT. We'll have to read it as EPIT actually. EBIT of 2,25,000, EPS will be same between two options. Question is indifference point. Question is not financial BEP. Guys, remember that EPS will be 0 is financial BEP. We are not talking about financial BEP here. Yeah, correct. Option C is the final answer. Next, question 25. Answer this. Irrelevancy model of capital structure believes that, remember, irrelevancy model, irrelevancy theory, there were two approaches, net operating income and MM approach, correct? And both are under the category of irrelevancy model. And they believed what? Read sub question A, sorry, option A. Value of the firm is dependent on cost of capital, sir. No, no, no. Exactly reverse of this is what they said. They said irrelevancy, according to them, these are not connected. Second, value of the firm is equal to 0. Never, they did not say this. By reducing EBIT, company can increase the value, sir. How is that possible? Meaningless. Option D, value of the firm and capital structure are independent things. This is the correct answer. Sir, what is the meaning of this? Independent. Whatever is your capital structure, more debt, less debt, no debt, fully funded by equity, 50-50 debt equity, none of this can change the value of the firm. That's why they are called irrelevancy. Correct? I'll just do a 1 minute theory revision. Remember, before this, there was relevancy theory. Relevancy theory, net income approach and traditional approach. In both the approaches, they said you should have more debt. Debt is cheaper. Because of debt, overall cost of capital comes down. If overall cost of capital comes down, then the value of the firm goes up. Value of the firm goes up. But this irrelevancy model said you do whatever you want. Value of the firm is not going to change. Having more debt, less debt is irrelevant. Correct? So value of the firm and capital structure are independent things. One is not connected to the other. Yes, sir. Question 26. Traditional model of capital structure believes. Traditional model. Just now I told you something. Traditional model comes under which category? Relevancy theory. Relevancy theory. And they believe what? Debt is good. Debt is cheap. But we are talking about traditional model. If you can recall theory discussion properly, option A says company should never go for debt. Nobody said this. Nobody said this. By mistake also don't take. Company should go for maximum or unlimited debt. No, sir, this is not a traditional model. Those students who are sending option B as the answer, company should go for maximum or unlimited debt, was not traditional model. You are correct, but some other model. You are not correct for this model. Third one says up to a point debt is good. Beyond that, company should avoid debt, sir. This looks correct to me. This looks correct to me. Yes. Option D says companies should be financed equally between debt and equity. Again, nobody said this sentence. 50-50 is the best policy. Nobody said about this. Correct? Remember, in traditional model, the graph was like this. Up to a point, debt, correct? KD. And because of that, equity also up to a point. These will be in your favor. I hope you are able to recall this. KO up to a point, overall cost of capital comes down, but after that debt should be avoided. Yeah, this was traditional model. Yes. Question 27. Which model is in support of unlimited or maximum debt? Tell me, I want your answer. Unlimited debt or maximum debt means what? There was a model in this topic which said take debt after debt after debt, unlimited, maximum. If there are 10 banks ready to give you loan, take from all 10. That is good, forever good, unlimited is good. Who said this? Which model said this? Net income approach, first one in our topic. This was the first model, net income approach. Remember that graph? They said KD is a straight line, how much ever debt you take, correct? KD remains same, and KE also remains same. Shareholders expectation will not change, and because of this, the more and more and more debt you add, overall cost of capital will come down. So they said take as much debt as possible. More debt, much better. Much more debt, super, very good. Remember this? Yeah, it says you should take debt. It is in support of debt. Yes. Question 28. Financial break-even point is 58,000. What does this mean? Go slow. Financial break-even point is what? It is a level at which EPS is zero. It is a level at which EPS is zero. Able to recall? Now, what is the meaning of EPS is zero? Earning available to equity shareholders, that is zero. And when will that happen? Company is earning some EBIT, but that is enough only to pay interest, taxes, and preference dividend. Am I correct? That means 58,000 is necessary to pay interest, taxes, and preference dividend. Which option? Option A looks wrong, B is incomplete, C looks correct to me. With 58,000 rupee, company will be able to pay taxes, interest, and preference dividend. Indirectly, they said earning available to equity shareholders will be nil, big zero. Yeah. Oh. Yes, sir. With this, we are done with capital structure topic. Yesterday we did about 10 MCQs. Today we have done 18 more. So total 28 questions on capital structure topic alone we have completed. Let's move on, sir. We have to start with working capital management. Are you ready? And here it is, working capital management. Yeah. Question number 1. Working capital is also known as operation capital, operating capital, current asset capital, capital related to main projects of the company. It's operating capital. Remember, there was a method itself. One of the methods of estimating working capital is using operating cycle. Able to recall? That means working capital should be what capital? Operating capital, day-to-day capital. Question number 2. Positive working capital means what? I will wait. I want you to try. Question number 2, I want you to try. Read properly. Options are slightly confusing. Read properly. First one says company is able to pay off long-term liability. Second says company is able to select profitable project. Third, company is unable to meet short-term liability. Company is able to pay short-term liability. Positive working capital means what? Current assets are greater than current liability. CA more than CL. When current assets are more, that means you have more money than your current liability. Correct? Suppose current liability payable is 10,000. Your current asset, cash in hand, cash at bank, inventory, debtor, bills receivable, all put together is more than 10,000 rupee. Then what does that mean? Company is in a position to pay off short-term liabilities. Option D is the correct answer. Yes, let's move on. Question 3. Working capital is equal to, I think, option D, current assets minus current liability. Sir, what is this option A and B? Core current assets. What is core current asset? Sir, this we studied in that Tandon committee recommendation, maximum permissible bank finance. Hope you're able to recall. What is core current assets? Let's do 1 minute revision. Core current asset are those current assets without which a company cannot survive even for a day. Correct? Mainly your inventory was the example that we discussed. Core current asset, understand, name itself says the most important current asset. Imagine you're running a hotel. How can you run the hotel if you do not have inventory with you? What if you don't have vegetables, you don't have groceries, you don't have water supply, you don't have milk? What will you do in hotel? How can you run the business? Correct? Therefore, inventory is one example of core current asset. Without inventory in hand, you cannot run the business even for a day. Even for a day. Correct? Therefore, correct answer to question 3 is D, current asset minus current liability. Yes, sir. Fourth one. Other things remaining constant. If debtors increase as compared to last year, what does it mean? Company has a poor credit policy. Company has a positive working capital, negative working capital. Company has blocked more funds in working capital. Sir, A and D both appear to be correct, but D is a better answer. Company has blocked more funds in working capital. I'll tell you why I am not going ahead with A. Company has poor credit policy. I cannot say this is a complete wrong answer, but think about it. Poor credit policy is multi-layered. Whether to give credit or not is also credit policy. Once you decide I should give credit, whether it should be 10 days or 30 days or 60 days, that's also credit policy. After giving 30 days, if you don't take actions after 30 days of credit period, if you don't go for factoring, if you don't have a collection team, if you do not follow up, if you don't call your customers, that's also your credit management. Right? Therefore, A cannot be considered as the perfect answer. I would go with D. You have blocked more money in working capital, because that is the straight simple answer than going for A, because A is a much bigger thing. Poor credit policy is not only about debtor going up, whether there should be debtor or not. Think about it. A company can do their cash sales without doing any credit sale, then there is no credit policy itself. Correct? Therefore, D is a better answer than A. A is not a wrong answer. D is a better answer. Yes. Question number 5. Which of the following will be considered while calculating working capital? Short-term advances, stock of work in progress, bills receivable, bonds. Sir, we are talking about working capital. That means we should take only current asset and current liability. And when I say current asset, short-term advance, WIP, bills receivable. Sir, 1, 2, and 3. We should go by option C. Am I correct? We should go by option C. We should consider 1, 2, and 3. We should not consider bonds. Bond is a long-term liability. Bond is like debenture in simple. Yeah. All right. Let's move on. Option C is the correct answer. Yes. Question 6. For reducing working capital, please read question properly. You want to reduce working capital. Which of the following step is required to be taken? First of all, before you go to options, to reduce working capital, either your current assets should come down or current liabilities should go up. One of the two will help you. Am I correct? If your current assets come down, then also working capital is reduced. Current liabilities go up, then also your working capital is reduced. So read properly. Increase in manufacturing cycle. What is the meaning of this? Earlier you are taking 25 days to complete the production, manufacturing cycle. You start the production, you complete the production. Earlier you are taking 25 days, and now if you take more days, sir, that will block our money for longer duration. Therefore, sir, A is a wrong answer. A wrong answer. B says increase in credit period allowed by creditors to the extent that it does not affect production. Yeah, please read this properly. Increase in credit period allowed by creditor. Earlier supplier was giving me 25 days, now he is giving me 35 days, 45 days. Sir, more time from creditor is good. More time from creditors is good. Yeah, it will reduce my working capital. B looks good to me. Option C, increase in credit period given to customers. Sir, no, 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 no. If we give more credit to our customers, they will keep our money for extra days. They were paying within 30 days. I told them take 45 days. How will that help me? Therefore, the correct answer is option B. Increase of credit period allowed by creditors. If creditors go up, current liability goes up, overall working capital will come down. I hope all of you understood this. I can see some wrong answers in the chat box. Guys, did you understand your mistake now? Are you clear? Are you clear? Good. Let's move on. Question number 7. Contingencies are added to working capital, deducted from working capital. Contingencies are not at all considered in financial management. It is considered in accounts. None of the above. Answer is A, added to working capital. Please understand this. We have done practical sums on this. We calculate working capital and then they say you consider 5% provision for contingency. 5% provision for contingency, correct? We add that contingency. Now sir, why are we adding? Think about it. As per your calculation, you should have 5 lakh rupee raw material inventory, but you think there can be contingency, there can be emergency situations, correct? Therefore it is better I'll keep little extra stock. You want to keep only 1 lakh rupee cash in pocket, cash in hand, but I said no, no, there may be some emergency, keep little extra. That means in all these cases you are adding, correct? You are adding it. Yes, therefore contingencies are added to the working capital. Yes sir. Question number 8. Capital is a highly effective barometer of companies dash management. Tell me, if I say companies working capital is in favorable condition, am I talking about their profitability? No, sir, it's not about profits. Am I talking about long-term liquidity? Long-term liquidity is whether you will be able to repay loans, etc., over long period. No, 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 working capital is not about it. Working capital is option C, short-term liability. If I say XYZ Limited has good working capital condition, what does it mean? They have enough money to pay their short-term commitments. Correct? Yes. All right. Option C is the correct answer. Next, Question 9. There are two statements, statement 1 and 2, and then option A, B, C, D. It says one is correct, one is incorrect, one is correct, both are correct, and so on. Let's see. Let's see. Statement number 1. Maintaining adequate working capital is not just important in short term. Sufficient liquidity must be maintained in order to ensure the survival of the business in long term also. Sir, this is true. This is true. Correct? You need stock in hand. You need cash at bank, cash in hand, deposits, not only for day to day comfort. Unless you have enough day to day requirements, how will your company grow in long run? It is necessary to survive for longer duration also. Second statement. That means first one is true. Yes, sir. Second one. Even a profitable business may fail if it does not have adequate cash flow to meet its liabilities as they fall due. Correct? Your company now, sir, both statements are correct. Option C is the answer. Before you go to the answer, understand statement 2. What are they saying? Company is in profit. Company is in profit. But what if they don't have enough cash in hand to pay wages? What if they don't have bank balance to pay rentals, electricity bill, internet bill, pay to the supplier? If you don't have money for these day-to-day expenses, even if you're making profit, you cannot become a successful company. You can't ask your employees to wait every month saying, I don't have enough cash now, give me 10 more days, I'll pay you salary. What is the use of your profits if you can't take care of basic requirements of day to day? Yeah, so option C is the correct answer. Yes, question 10. While calculating working capital based on cash cost. Okay, sir, in cash cost, what do we do? Sir, depreciation we don't take, correct? Sir, not only depreciation, all non-cash items we don't take, like amortization, preliminary expense written off, goodwill written off, correct, we don't take. And also, sir, debtor is valued at cost. Debtor is not valued at selling price. Therefore, all of the above should be the answer. All of the above should be the answer. Are you with me? Everybody? All of the above is the answer. Yes. Yes, sir. Perfect. Let's move on. Question 11. Negative working capital means what? When will negative working capital come into picture? Your current assets are 5,000, current liability is 6,000. Yeah. So you get working capital as minus figure. What does that mean? Option A. Company has no current asset at all, sir. This is wrong. We have some current asset, but liabilities are more than current asset. B. Company currently is unable to meet its short-term liability. This looks correct to me. Option C. Company has negative EBIT, sir. This is not about profits. It is not about EBIT. Company currently is able to meet short-term. No, then you will have positive working capital. That means option B is the correct answer. Option B is the correct answer. They are unable to meet their short-term liabilities. Yes. Question 12. Which of the following analyzes accounts receivable, inventory, accounts payable cycle in terms of number of days? Sir, this is operating cycle. Easy question. Remember, operating cycle is about RM days, WIP days, FG, debtor, and creditor. You add all current assets and minus the creditor days. My cash cost approach or total cost approach, that is not about days, that's about amounts in rupee. Operating cycle is when you calculate everything in days. Guys, it's not operation cycle, it's operating cycle. It's not A, it is C. Don't do silly mistakes, please. Yeah. Right. Question 13. Which of the following is determinant of working capital? Yes. How do you decide how much should be working capital requirement for your company? It depends on many things. Nature and size of the business, correct? Small business, big business, one branch, 10 branches, definitely it will impact. Manufacturing cycle, whether you need 5 days or 10 days or 1 day, or you're just buying and selling within a day. Depending upon that, you have to decide how much stock you need. Credit policy, that is how many days of credit Number one, you are giving to customers. Number two, you are getting from suppliers. Both production policy, how quickly you can start and complete the production. Sir, I think all the above. Option D is the correct answer. All the above. Are you with me? Yes. Actually, we are also doing a kind of theory revision here, because in theory they ask this: on what basis company will decide how much should be the working capital, correct? And we write the standard answer: working capital is based on multiple factors such as nature and size, manufacturing cycle, credit policy, production policy, demand and supply, correct? And there were three policies: conservative, moderate and aggressive. In a way, we are revising all of that. Are you with me? Yes. Which of the following statement is correct? Read. A desire to maintain an established dividend policy may affect the volume of working capital. This is true. Why this is true? If you say, I have to pay so much dividend, then you have to keep so much cash. Now, to keep so much cash, if you do not have enough money, then you have to collect from your customers, or you have to delay payment to suppliers, or you have to bring in additional capital from your pocket to have enough cash in hand, cash at bank, so that you can pay dividend. Correct? That means how much dividend to be paid, that will impact your working capital. So option A looks correct to me. Option B, changes in working capital may bring about an adjustment in dividend policy. True, this is exactly reverse now. If you want to keep too much of working capital, then too much of your cash gets blocked in dividend, sorry, cash gets blocked in working capital, then you will have very less money to pay dividend. Yes. Option C, payment of dividend may reduce cash in current asset considerably, which in turn may reduce the availability of working capital. Sir, all the above is the best answer. All the above is the best answer. Yes. All statements are talking about same thing, whether dividend is connected to working capital. That's all. Yes. Let's move on. Question 15. Working capital in excess of regular working capital is known as. Answer this. I want your answer. First, understand what is the meaning of regular working capital. Irrespective of seasonal ups and downs, whether there is a festival going on or not, whether there is high monsoon or not, whether there is weekend or weekday, whether it is beginning of month, end of the month, you should always keep some working capital with you. Some cash in hand, some cash at bank, some advances, some stock in hand. But when there is a festival, when there is a weekend, you know your sales will be high. When there is a peak season, you know your sales will be high. If sales are to be high, you need to have enough stock with you. And if you do not have money to pay and purchase that stock, your cycle won't start. That means for the temporary period, you will require some extra investment, and that is called what? Fluctuating working capital. Yes, everyone, 15B is the answer. If you can recall, I had discussed this in my regular class. As your business grow, you need working capital, but because of seasonal ups and downs, you may need little extra working capital for the 3 days, that 5 days before festival, during festival week. For those 5 6 days, you will require little extra cash with you. You will have little extra bank balance. You will have more customer, more production, more sales. Everything will be more. So you need little extra. Yes, sir. Question 16. Fluctuating working capital is also called as B, temporary working capital. Why is it temporary? You will not keep that extra of cash, bank, stock forever. That's only for those 5 10 days. Just now I told you. Just now I told you. Yes. All right. Option B is the correct answer. Question 17. Operating cycle is also called as working capital cycle. Let me quickly do 1 minute revision. What is this operating cycle? The time required for you to get back your original investment. I'll take one example. You put money today, purchase raw material, start production, complete the production, it becomes FG, sell it to customer, he becomes a debtor, collect from him, you get cash. So first you pay cash and then the whole cycle will begin and the cycle will end with you receiving the cash back. This full cycle is called operating cycle, which is measured in days, and operating cycle is also called as working capital cycle. Working capital cycle. Yeah, let's see how many of you can answer this question. One question is not there on screen. I am creating one question. Listen, which one is better, longer operating cycle or shorter operating cycle? Which one is better, longer, lengthier operating cycle or shorter operating cycle? Answer. Answer, everyone. Shorter one is better. Good. Why shorter one is better? In shorter, smaller working capital cycle, you invest money and you get back very fast. I invest on January 1st. If I can get that money on January 5th or 6th itself, then again same money I can rotate, I can reuse, I can recycle. Correct? Think about it. I buy goods in the morning, sell all items same day. End of the day, I collect the cash. Same cash I can use for tomorrow's purchase. And then I will move that cycle again. That means I don't have to worry about arranging funds because my cash is getting recycled so fast. That means a shorter working capital is always better. Always better. Yeah, perfect. Question number 18. Read. It's a detailed question. For reducing and controlling working capital requirement, which of the following step is required to be taken? They want to reduce working capital. Okay. Read first. Reduction of manufacturing cycle. Yes, good. Because if you can speed up the production and reduce the manufacturing time, it will reduce WIP period. Second, increase of credit period allowed by creditors to the extent it does not affect production. Sir, this is also good news. If creditors are going to give us more time, if creditors are going to give us more time, better for us. Yes. Third, reduction in credit period given to customers. Sir, fantastic. Earlier we were giving 45 days to customers. Now we are giving only 30 days. That means we will collect cash early. Correct? Select the correct answer, sir. All three are good. That means all of the above. All of the above. Yes. Question number 19. Capital which is needed to meet the seasonal requirement are called as fluctuating working capital. Sir, why? Read the question properly. Seasonal requirement. 5 minutes back I told you there is a festival. So you have to keep extra stock ready. That means that is for temporary purpose. That keeps going up and down. Festival comes, stock in hand goes up and then it will come down. Correct? And then you go back to your normal stock. Yes or no? Question 20. Please answer. A high current asset by current liability ratio. By the way, current asset by current liability ratio means what? Current ratio. Current ratio. Yeah. Indicates what? Excessive current liability. No, no, no. Shortage of current asset. Wrong. Excessive blockage of amount in current asset. Correct. Option C is the correct answer. High current asset, current liability. Think about it. Those are not able to get 20,000 by 10,000 will be 2 is to 1. What if it is 30,000 by 10,000? 3 is to 1. Correct? What does it mean? To pay 1 rupee to your current liability, you are keeping 3 rupee with you. Are you not unnecessarily blocking cash? Unnecessarily blocking your investment instead of keeping money in cash in hand, cash at bank, that can be invested elsewhere, and if you invest elsewhere you will earn some interest, some return, some dividend, some gain. But if you keep money in your regular bank account, or if you withdraw money from bank and keep cash in hand, where is the growth? Money will never grow. Yes, sir. So it's called blockage of funding. Question 21. A conservative policy means what? No, no, before you go to option, think, understand. Question says conservative policy. What is the meaning of conservative policy? Sir, I want to play safe. What is the meaning of playing safe? If I need 10,000 working capital, I will keep 11,000. I do not want any problem in my day-to-day liquidity. Okay, that means you want to keep more money in day-to-day operation, high liquidity. Yes, sir. And if you keep high liquidity, your short-term risk is also reduced. Suddenly, one employee comes and says, "Sir, I have emergency at home. Give me some money, early salary." You can give because you have little extra cash with you. Correct? Imagine one debtor dies, death of a debtor. Now we have to write off so much, but if you have little extra cash in hand, cash at bank, you will not worry so much. Correct? Imagine one debtor dies and one creditor comes and says, "My amount is due after 7 days, but I need some money urgently now. Can you pay some advance?" Now, if both things are happening on same day, it's a problem to you. But if you have little extra cash in hand, cash at bank, overall working capital with you, you will be able to meet such emergency requirements. That means your risk, short-term risk is reduced and your liquidity position is much better. It's a high liquidity and low risk option. Question 22. High level of current assets will result in option C, high opportunity cost. Or why are you saying this? Understand what is the meaning of opportunity cost. Instead of keeping money in current assets, which is stock in hand, advance, deposit, cash in hand, cash at bank, all of that, instead of keeping money there, I could have invested that in long term assets, fixed assets, or I could have invested in somebody's shares. I could have purchased somebody's bonds or commercial papers. I could have kept that in bank FD at least as investment. I would have earned some interest. Now, when you put your money in your day-to-day activities, you will be losing that interest. Loss of interest is loss of opportunity. That's why it's called opportunity cost. Opportunity cost is the best benefit forgone. When you put money in working capital, you are sacrificing some return. Yes. So option C is the correct answer. Liquid ratio and current ratio are same. This is false, false, false. Why? Current ratio is all current assets by current liability. But when you say liquid ratio, you don't take all current assets. You do current asset minus stock because stock is illiquid. Stock is illiquid current asset. What is the meaning of liquid and illiquid? Liquid assets are those which can be converted to cash easily. They will flow fast. That's why they're called liquid. Illiquid is it takes more time to get converted to cash. Stock takes more time to get converted to cash because it is in the form of raw material. How will you get cash from raw material? You have to start the production, it becomes WIP, you have to complete the production, you'll call it FG, then you have to find a customer, sell it to him, he becomes debtor and then he will give you cash. So it takes more time to convert stock to cash. Therefore, stock is illiquid current asset. Yes. Capital which is required to finance current asset is called working capital. Very simple question. I don't think you need my explanation on this. Yeah. Question 25. An asset is classified as current asset when, yeah, read. When will you call an asset as current asset? Simple. Option A says asset is held primarily for the purpose of trading. Correct. You bought it, you want to sell it. From sale, you want to collect cash. From cash, again you want to buy. Once you buy, again you want to sell and convert to cash. That means stock is an example of current asset. Second, it is expected to be realized within 12 months. 12 months basically mean 1 year. You don't want to keep it for 2, 3, 5, 10 years. It's not a long term or a fixed asset. It is a short term asset. It is non-restricted cash or cash equivalent. Correct. Current asset is not just cash or bank. It also includes inventory. It includes debtor. There is so much that is included. So we can't say it is just cash and cash equivalent. So option D is the correct answer. Yes, sir. Let's move on. Question 26. A long-term working capital represents the amount of funds needed to keep a company running. True. Short term capital varies directly with the level of activity achieved by a company. True. Volume of operation decides the quantum of short terms. Are all statements are true. What is the meaning of this? Volume of operation decides quantum of short term working capital. Volume of operation means how many units you want to produce and sell, how many hours you want to work, how many days you want to work. Depending upon that, you have to decide how much of working capital is required. Guys, do you remember your favorite sum of working capital? I think the last question, big question. Company decided to do double shift. I hope you can recall. Company decided to do double shift. Accordingly, we said working capital requirement will also be more. Raw material we did into 2. FG we did into 2 multiplied by 2 because you're doing 2 shifts. When you do 2 shifts, you will produce more units, double units. Therefore, your not only cost will go up, your working capital requirement also will go up. Yes, good. Sir, the double shift problem we will not forget. Yeah, sir, not only double shift. Before that, we did one question, sir. 2 years cost sheet and working capital. I still remember you guys almost cried that day. Ah, yes. Hello. Now see all the efforts put in the regular class is finally helping us in connecting those concepts to solve these MCQs. Otherwise, if you don't solve descriptive questions, you will not be able to connect this at all. You can't mug up these theories. Guys, I hope you are able to understand what I'm trying to say. Unless you do practical detailed sums, you will not be able to connect what is this volume of operation decides quantum of working capital. Volume of operation means how many units to produce. When you say double shift, 24,000 units became 48,000 units. When that became double, raw material requirement was also into 2. Debtor was also into 2 because you will be selling double quantity. Unless you practice, you won't be able to connect these things. Yeah. Chalo, let's move on. Question 27. Dash refers to the firm's investment in current asset. The current asset only they are asking. When they say only current asset, they are talking about gross working capital. Do you remember? Gross working capital means only CA. Net working capital, when I say it is CL. CA minus CL. CA minus CL. Everybody, I hope this is clear. When question is simply about current asset, it is gross. When it is current asset minus current liability, it is net. 28. Net working capital can be positive or negative. First of all, what is the meaning of net working capital? CA minus CL. Can it be positive? Sir, definitely yes. Can it be negative also? Yes, sir. When my current liabilities are more than current assets, it can be. So statement 1 is true. Okay, statement 2. A positive net working capital will arise when current assets are more than current liabilities. Sir, both statements are true. Both statements are true. Yeah. Yes. Perfect. 29. Financing decision answers. Very important question. Go very slow. Statement 1. Financing decision answers where from fund to be sourced at lowest cost as possible. When I say financing decision, it's all about from where should I get money? Equity, share capital, debentures, bonds, bank loan, preference, reserves. Correct? That means our statement 1 is true. Second, investment decision answers how much fund is to be tied in to achieve the organization's objective. Correct? Investment decision is all about where to invest, how much to invest. Yeah, sir, both statements are true. Both statements are true. Yes. 29A is the answer. Some students are saying 29B. Guys, you're not understanding properly. I'm repeating the statement too. It says investment decision. How much fund to be tied? What does it mean? I have 10 lakh rupee. Which project to do? Which machine to buy? Your capital, your money is tied with that project. Your money is tied with that machine. When you say machine A, machine B, project B, you're blocking your money in that project. That is investment decision. Yeah. All right. Question 30. Read. How much to be invested in current asset as working capital is a matter of policy decision by an entity. Perfect statement. There is no set rules for deciding the level of investment in working. Sir, both are true. Guys, first statement is easy to understand, but second statement, read properly. There is no set rules for deciding the level of investment in working capital. Correct? There is no section number, there is no formula. Nobody says if you are running a CA office, then you should have 2:1 ratio, 3:1 ratio. There is an ideal, a recommendatory, advisory ratio 2:1. You should have double of current liability. But if it is 1.9 or if it is 2.1, nobody will say it's a crime. Nobody will say it's a violation of law. Nobody will say you have to pay penalty. Which law, which act, which section says you have to maintain? There are no set standards at all. Your company, you decide how much money you require for your day-to-day operation. In simple, that is working capital. Yeah. Right, sir. Question 31. A dash entity has to maintain three levels of inventory: RM, WAP, FG, whereas a dash entity has to maintain inventory only in the form of FG. Sir, first one they are saying raw material, work in progress, and finished goods. That means it should be manufacturing company. But second one they are saying only FG. That means that should be a trading company. What is the meaning of trading company? You buy, you sell FG as it is. Correct? That means sir, first one should be manufacturing, second one should be trading. So 31B is the answer. Sir, why not 31D? Guys, understand option D says manufacturing and service. In service industry, where is stock? Where is finished goods? Think about it. A bus company, a cinema theater, CA office. Where is closing stock? In the form of FG. Correct? Therefore, it should be manufacturing and trading. Question 32. Which approach considers depreciation while estimating working capital? They say which approach considers depreciation. That means depreciation is included when you are solving the sum under total cost approach. Yes. Guys, I think printed answer is incorrect here. Option A, total cost only. Total cost only. Yes. Cash cost is exactly reverse. In cash cost, depreciation is never included. In cash cost, depreciation is never included. Yes, sir. So A is the correct answer. A is the correct answer. I have updated it. And when I share PDF with you, I will update it and then send it. Don't worry. Okay. Yes, sir. Question 33. Dash approach of working capital investment uses high capital investment in current asset. If you're making high investment in current asset, that means you're trying to play safe. To play safe meaning conservative. Option B, conservative. Everybody, I hope this is clear. Conservative. You want to play safe. You don't want to take chances. You don't want to take risk. Yes, sir. Question 34. Under dash approach of working capital investment, a balance between risk and return is maintained to gain more by using funds in very efficient manner. If you are saying I want to balance risk and return, that means you're talking about moderate policy. Moderate policy. Guys, understand, I'll do a quick revision in 1 minute. Aggressive policy says maintain less working capital. Don't keep too much of working capital. Don't block your money in working capital. Use all that money for fixed assets. And if you use more money in fixed asset, you can make more profit. Aggressive policy. Third one, third one was conservative policy. Play very safe. Keep more than necessary working capital. Less money allocated to fixed asset, no problem. But day to day, you should play very safe. Conservative policy. So two are completely opposite. Moderate policy tries to balance both. Moderate policy says you should balance both working capital as well as profitability, both return as well as risk. Correct? Yes. Question 35. In determining the optimum level of working capital, the firm should balance, just now I told you. What is that you are trying to balance? One side you want to make good profits, another side you want to manage your profitability. That means it is profitability and short term solvency. Sir, why not long term solvency or long term liquidity? Boss, question is about working capital. When question itself is working capital, that means you're talking about day to day affairs. Day to day affairs. Correct? Yes, sir. Let's move on. 36. Statement number 1. Working capital financing or current asset financing is done by raising short-term loans or cash credit, but fixed asset financing is done by raising long-term loans or equity. Statement 1 is 100% true. If you want, I will explain this once again to you. Very, very important sentence. Read again. Working capital financing or current asset financing is done by raising short-term loans or cash credit. Now, short-term loan cash credits are current liabilities. They are talking about current asset being funded by current liability. That is the correct thing to do. Your day-to-day asset should be funded by day-to-day liabilities. Whereas, read the sentence full. Fixed asset, that is long-term asset, should be funded through long-term liability. This is your overall balance sheet. Your long-term asset should be funded through long-term liability. Your short-term asset, that is current asset, should be funded through short-term liability, that is current liability. And that's the correct way of managing funds. You should never do this mismatch. You should always use long-term source for long-term asset creation and use current liability for current asset. Yes. Statement 2. Capital structure leverage is associated with fixed asset financing with an optimal mix of owner fund and borrowed fund. Sir, both are true. Capital structure leveraging means what? Having a good balance between own money, share capital, and debt money or borrowed money. You have to get a good mix of the two. Yes. So both 1 and 2 are true. Question 37. In the formula of operating cycle, raw material, WIP, finished goods, debentures, debtors minus C stands for credit period allowed by supplier or creditor. Option B is the correct answer. Yes, sir. Question 38. Stage 3 of operating cycle. Sir, stage 3 means what? First comes RM, then comes WIP, then comes what? Stage 3, FG. Yes, sir. Option C, period of turnover of finished goods stock, FG. Yeah, easy question. Question 39. Period of credit taken by customers. Customer means debtor period is represented by option A, B, C. D. They have given formulas to you. Yeah. First, you tell me our understanding. Formula was customer means debtor. Debtor period is equal to credit sale by average debtors. Credit sale by average debtor. But here, sir, I think something else also credit sale by average debtor. But sir, I am not seeing any such thing, right? But observe properly. Credit sale by average debtor when you do. After this, you are multiplying this by 365. so that you can get days, credit sale by average debtor into 365. Guys, I hope you are able to understand. Yes, instead of doing credit sale into 365, I can reverse the formula. What is the meaning of reverse the formula? Average debtor divided by daily credit sales. Average debtor divided by daily credit sales. That means option A is the correct answer. Option A is the correct answer. Sir, I am not convinced with this explanation. If you are not convinced with the explanation, take some numbers. Do this in calci. Suppose credit sales are 30,000. 30,000 divided by 10,000. Yeah. Guys, did I take the reverse formula by any chance? One second. Some students are saying there is lag. Just a minute. Can you confirm now? Is it okay? Is the streaming okay? It's okay now? Chalo. Yes, let's continue. Hmm. Period of credit taken by customer is represented by option A was the answer. Yes. Sorry, I think when I wrote the formula, I took the debtor turnover ratio, maybe. Our formula was debtor period is equal to average debtor divided by credit sale into 365. Instead of doing into 365, if you want to divide it, that should become daily sales. Daily sales. If you're not able to understand, put some numbers. Say 10,000 debtors, 30,000 credit sale. Now, whether you write in our formula style or you write in this style, you will get the same answer. Yeah. So average receivable divided by average credit sale per day. Yes. Question 40. The formula of RM stock. Now this is also in same style. When you're talking about RM stock, option A and option C both are wrong. One is about creditors, another is about receivable debtors. That is not what we are talking about. It should be option B. Average value of stock divided by RM consumption per day. Guys, instead of doing into 365, they're dividing by 365 and writing that here, consumption per day. Consumption per day. Now those who are not convinced without numbers, I am putting some numbers. Do this in calci. Option B says average value of material in stock. Say 10,000. Do in calci. 10,000 divided by consumption per day. Suppose every day you are consuming 4,000. Correct. Now 10,000 by 4,000 will tell you for 2.5 days, whatever is necessary, you are keeping that stock. 10,000 divided by 4,000. 10,000 divided by 4,000. 2.5. That means whatever is needed for next 2.5 days, you are keeping it with you. I hope you are able to understand. Yes. Question 41. The formula for period of production. Period of production means WIP. WIP. For WIP, what should I do? Average value of WIP divided by cost of production per day. Option A. Guys, question is about production. That means they're talking about WIP story. Production means WIP. Yes. Yes, sir. Can I continue? Yeah. Question 42. Formula of period of credit granted by supplier. Sir, supplier means creditor. That means they're asking about creditor period. Creditor period. A is wrong. B is wrong. C says average level of creditors divided by purchase of raw material per day, assuming all purchases on credit basis. C should be our answer. C should be our answer. Yes. Good. Everyone, I can see answers in the chat box. Fantastic. Very good. Let's move on. 43. Dash is the cost of keeping or maintaining inventory in a usable condition. Sir, this is storage cost, carrying cost, holding cost. All of that means the same thing. Option A, carrying cost. Other names are holding cost, storage cost. Yeah. 44. Statement 1. Ordering cost is the cost associated with placing each individual order for supply of raw material. Perfect. Ordering cost means what? Every time I place the order, there is some cost involved to bring the material from supplier's place to my place. Loading, unloading, transit insurance, lorry driver charges, packaging material cost, all of that. Second, statement B or statement 2. If the items are procured in small lots, then the annual ordering cost will be more. Correct? I need 10,000 kg. If I keep buying only 100 kg, 100 kg, 100 kg every time, I have to buy so many times. And when you buy more number of times, your ordering cost will increase. Sir, both are true. Both are true. 44. Option A is the correct answer. Next, 45. Dash determines the order size that will minimize the total inventory cost. What minimizes the total inventory cost? Economic order quantity, EOQ. Whole discussion on EOQ was this itself, correct? To bring down total cost. Total cost has three components: purchase cost, ordering cost, carrying cost. EOQ assumes purchase cost won't change, no discount, no inflation, no deflation. That means the game is all about OCCC, ordering cost and carrying cost. Yeah, perfect, sir. 46. If economic order quantity formula, sorry, in the economic ordering quantity formula, what does the denominator represent? What was the formula, by the way? Square root of 2AO by C. Okay, what was C? Carrying cost per unit per annum. Where is that in the option? C is the correct answer. Carrying cost per unit per annum. Are you with me? Are you with me? Yes. 47. Dash policy is an important factor determining both quantity and quality of receivables. The receivable is all about credit policy. Quantity means how many debtors. Quality means whether our debtors are good or bad. Are they paying on time or not? Are we chasing them to collect money, or whether they are very prompt in payment? That's the quality of your debtors. 48. Dash is a type of financial service which involves outright sale of the receivable of a firm to a financial company which specialized in management of. Sir, this is factoring story. Sir, we remember this very well. It's a financial service wherein we sell goods on credit, but we don't have to wait for the collection. We give all our debtors, all the invoices to our factor, and factor will pay full money to us. This is not bills discounting. Hello. Those who are saying option A in the chat box, in bills discounting, you sell goods and you draw bill, and that bill you show to the bank and take money. This is not bills discounting. Read. Sale of receivable, they said. Sale of receivable means what? Factoring. Yes, sir. Question you should work out. 49th you should solve. Firm uses 1100 units of raw material. Cost will be 1500. Ordering cost 150. Carrying cost 200. EOQ. EOQ. Tell me what to do. Square root of 2 AO by C. Do this in Calci. I will wait. You have to round off your final answer maybe. Is it coming to 41? I will wait. Is it 41? Can you confirm? I'm sorry. Option D, 41. Good. Yeah. Can I continue? Question 50. Same data. Firm uses 1100 units of raw material per annum. Prices given, ordering cost given, carrying cost given. Calculate the number of orders that are to be made in the year. By the way, just now you calculated EOQ as 41. That means every time when you purchase, it will be 41 units. And how many times you have to buy? First line says you need 1100 units per annum. So 1100 by 41. 1100 by 41. Who can answer? 27. Is it 27? Same data by the way, so you don't have to do EOQ once again. Yes, I can see many are sending option A. Good. Question 51. Sir, we are tired, so many MCQs. Don't be tired. Be happy. We are revising so many, it will help you. By the way, FM, SM paper together is 100 marks. So financial management is only 50. In that, MCQ will be 15 marks, 15, because total MCQ will be 30. Correct? And if it is 15 marks MCQs, I am expecting 2 marks MCQs, 5 questions, that will be 10 marks, and another 5 MCQs of 1 mark each. So 5 MCQs of 2 marks each plus 5 MCQs of 1 mark each. So all the theory MCQs they will put in 1 mark category, and problem solving like the one you are doing now, that will come in 2 mark type. We did lot of practical sums yesterday also, day before also. Such questions will come. So max to max you're going to have 10 MCQs according to me. Even if it is 1 mark all 15, then also 15 only. Yeah, we are practicing more. Good for all of us. Yes sir. Question 51. Factory uses 40,000 tons of a material priced at 50 rupee. Holding cost 10 rupee. Ordering cost 200. Find out EOQ. Square root of 2 into 40,000 into how much is ordering cost? 200 divided by 10. Many are saying 1265. Option B, 1265. Yes. Perfect. Question 52. Net working capital is 4695990. When they say net working capital, they have done CA minus CL. Yeah. Calculate the maximum permissible bank finance as per Tandon Committee method 1. Okay. Sir, in method 1, we are supposed to take 75% of CA minus CL. By the way, CA minus CL, they have completed 4695990. That means, sir, we should only do 75% of this. Correct? That's all. How much is 75% of 4695990? 21993. Is it option A, everybody? Option A. Yes. Good. 53. Standard Committee developed three alternatives for working out maximum permissible level of bank borrowings. These three are, read properly, 75% of the working capital gap will be financed by bank. Correct. Working capital gap means CA minus CL. The borrower has to provide 25% of total current asset of long-term fund, and bank will provide the balance. Correct. When 75% is funded by bank, 25% should be funded by owner, borrower, businessman. Therefore, sir, both A and B are correct. Yeah. Guys, just 1 minute quick revision. The Tandon Committee maximum permissible bank finance had three formulas. 75% of inside the bracket CA minus CL. Second one, 75% of CA, that is inside the bracket, separately current liability. Third one was 75% of CA minus CCA, core current asset is minus. So 75% of CA minus CCA, that is inside the bracket, outside the bracket minus CL. Any of these three can come as 1 mark MCQ. Very important. Yeah, perfect. With that, 53 questions and we are done with working capital management. Fantastic. I'm very happy today. Lot of answers sent by you in the live chat were correct today. Very, very good. Yes, I hope the session was helpful to all of you as well. Yeah, perfect. Therefore, tomorrow will be our last session of MCQ revision. And what is the plan? Tomorrow, ratio analysis and types of financing, the theory topic and ratio analysis. These two we will be doing tomorrow. Yes, ratio analysis, you have a lot of practical things to do, a lot of formulas. Correct? Do your revision and happy Yugadi to all of you well in advance. We will be not wasting even festival day, and I want you to join live in my next session also. We will complete both ratio analysis and types of financing with tomorrow's about 65 70 MCQs. We will be done with all 5 days of MCQ revision. By tomorrow's class we would have completed good number of MCQs. Yeah, fantastic. We will meet again tomorrow. Till then, take care. Bye bye.